Hello, everyone.
Hello.
Can you all hear me?
Yep.
Yep.
Okay, as I said last time, I will start with any questions, any topic, etc. you have for me to discuss. Once that part is done, then I will what's the date today? Okay. Yes, please. Any questions? No? Okay. Then what I have done is I have created an extra credit practice exam 3 for you. Can you see that?
Yes.
Okay. What I would like you to do is start doing a couple of problems. Let's just get fixed on 1 or 2 problems so that we can cover all the 3 or 4 topics. Uh, before I forget, Thursday, what I want you to do is finish this extra credit exam. Thursday, we will not meet face on Zoom. And I need you to finish, I want you to finish this extra credit exam and bring me any questions you have because I need to understand where you are having any issues. So when you meet me on 27th after this, I need you to bring me any questions you have. This exam will be open until 26th. Does everyone understand me?
Yes. Thank you.
Yep.
So this has 15 extra credit points. So I gave you 10, 12, and then 15. So you've got about 40 extra credit points just from here. But I want you to do the problems. Uh, let me just, I'll just show you the problems. See if you think that you can handle it or not. If you cannot handle it, stop me and then I'll explain it. Is that fair?
Yep. Thank
Yep.
you.
Because I don't know what you know and what you don't know. That's my issue. Okay. So what I've done is you've got on exam 3, you've got 20 to 23, chapter 20 to 23 on exam 3 or the final exam. And I have picked up both multiple choice questions and short problems as your final exam would more or less look like. And I think you had a choice of 70% multiple choice for, do you still want to maintain that?
Personally, on the last exam, I thought the multiple choice was harder than the short answer, so I wouldn't be opposed to switching it.
I'd rather have the 70% multiple choice.
Okay, how many of you would still like to have 70% multiple choice and 30% short problems? I need to type it in the chat box so that I know the, so when you're typing, yes, you're typing 70% multiple choice and 30, so basically the current format. I'm waiting for more answers. I still don't have the majority. I have 22 students here and I've got about seven responses as of now. I'll share my screen with you so that you can see as to what I see, what I'm seeing. As of now, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I need 2 more. Okay, seems like 70-30. Other people are either not there or are not responding. Okay. I guess I've waited enough now. Okay, you should be able to see my screen now. Do you all see the screen with the McGraw-Hill Connect on it?
Yes.
Okay, so here is the first problem. We are not doing the problem. You'll be doing this on your own. I'm just taking you through it so that if you have any questions or something bothers you, just let me know so I can explain it to you. That's the only purpose today. Okay. And once again, we are not meeting via Zoom on Thursday. We will meet on 27th after this class, and you'll finish this extra credit multiple choice assignment and then ask me any questions you have. That's the plan. You know, I've got so used to repeating things in the class that I start repeating it at home also. My wife gets annoyed with me.
Oh, I bet.
It's so unconscious that I keep on repeating myself. She says, I understand it. I said, I know, I understand it. It's just the habit, I guess.
That's got to be really frustrating for you.
Yeah, that's not my intention, but she like, I think over like 20 years of teaching, I've just got used to it. And I do it unconsciously. It's not that I try to irritate her or anything. I do it unconsciously. Anyway, so again, feel free to stop me whenever you want. So here is the production budget for the 4 months. And each finished unit requires 6 pounds of raw materials and ending inventory equal to 30% of the next month's production needs. So whatever the next month's production need is, so whatever the number of units are, times 6 will give you the raw material requirement for the next every month. Beginning raw material inventory is 1177 pounds. So that's given to you, that makes your task easier. Cost is $4 per pound. You have to prepare the direct materials budget. So first thing is you should know the format. So you've got the materials needed for production. That is basically your 654 times 6 units gives you the materials needed for production. So materials needed for production, add ending inventory, budgeted ending inventory, which is 30% of the next month's production needs. So whatever the next month is, the production needs for 30% of that. Gives you the total requirement for the material minus the beginning inventory. This is given to you. And then the ending inventory becomes the beginning inventory for the next month. You subtract it, multiply it by 4, you get the purchase budget. You can handle it.
Yep.
Everyone okay with it, please?
Could we I could we go over the budgeted ending inventory one more time?
The budgeted ending inventory, right? Is that what you're asking?
Yes.
Okay, so it tells you over here that budgeted ending inventory is 30% of the next month's production needs. Do you understand these are the production needs?
Okay. Yeah, okay, I get it now. Thank you.
So 30% of the next month. So for April, 30% of May, 30% of June, 30% of July, which is basically 667 times 6. Okay. Any other question? And the ending inventory of the previous month is the beginning inventory for this month. This is already given to you. Next, direct labor and factory overhead budget. Production is 2,800 units. Requires 4 direct labor hours at a cost of $8 per hour. So to prepare the direct labor budget, you know 2,800 is the units produced, 4 hours. Labor rate gives you the direct labor cost. Everyone good there?
Yes.
Next is your factory overhead budget. Basically, you added it tells you variable overhead is applied at the rate of $10 per direct labor hour. So direct labor hours are 11,200 times 10 gives you variable overhead plus fixed overhead gives you the total budgeted overhead. Production budget, again, very similar to what we have done earlier. The only thing is production budget is based upon sales. So they give you the sales for the month and you just put that over here. It says the company's policy is to maintain inventory equal to 50% of the next month's sale. And at the end of August, company had 1,500 finished units on hand. So again, very same concept. You add this is what is required. And then you add your budgeted sales. So this is, generally we started with the budgeted sales, then you add the ending inventory, which is computed here. and less the beginning inventory, same process. We just computed the ending inventory first. What the hell they have done? Just a second. They just took the next one. So your budgeted sales was 3,000. September was, so for September, next month is October. 50% of October is 2,250 and so on. Okay. So they just computed the ending inventory first here. Is everyone okay with that?
Yeah.
Okay. Cash budget. Cash budget is again a beginning balance of cash plus cash receipts minus cash payments. Gives you the ending balance. Then any adjustment for the loans to be made. So it tells you that these are the cash receipts for January, February, March cash payments. So cash receipts, as they are given here, 522,409 and this. Cash payments as given to you over here. Then it tells you that it requires a minimum balance of $50,000 at the end of each month. In return, the bank has agreed that they can borrow up to 160,000 at an interest rate of 1% paid on the last day of each month. It is computed based on the beginning balance of the loan for the month. Company repays any loan in excess of 50,000. Company had a cash balance of 50,000 and a loan balance of 100,000 at January 1. So January 1, 1% is $1,000. So that's the interest expense. So at this time, they have got 104,400 cash balance. They are paying 54,400 off to maintain a balance of 50,000. Now their loan ending balance is 45,600. And then the process repeats. Any question for the month of January? Okay. I'll probably move on to the next chapter now. Why don't you all try to do this one? Can you confirm this answer? You don't need to do it over there. You can just do it here or do it on your. Can you just confirm the answer for budgeted production, please? Whenever you're done, please type something in the chat box so that I know that you are done with it. Okay, I'm assuming there are any questions or everyone is done with it now. So you should be able to do these kind of questions, I'm assuming. Well, try one more and then we'll move on to the next chapter. This is an alliance company. Make sure you're able to get the right answer and you understand it. That's important. If you got it, please type in your response. And I also sent you an email for Thursday. Okay. Everyone good with it? Okay, here's the next one. On sales collection, please confirm the answer. Okay. Any questions, please, on collections budget? Okay. This is on the labor cost variance. Again, write down the formula. Any variance problem, very straightforward. Write down the formula and fill in the numbers. That's about it. There's nothing more to be done. So in this case, we have to find the total direct labor cost variance. So total means that you have to have, I guess, the total, that is the addition of both the both the variances, price and the material. Or you can do 1 minus 3, which is basically your actual minus your budgeted. That will give you the total variable variance. So this is actual hours minus times the actual rate gives you the actual cost. This is your standard budgeted cost. So actual minus budgeted. The middle one is the flexible budget actual at standard. So this is 1 minus 3 directly. You can do it. Or you can compute each one of them, compute two of them together separately and then add it. That will also give you the same thing. Now, does everyone understand this, or do you want me to explain anything else on it?
I think we're good.
Okay. Okay, here is the direct material quantity variance. That means again, you write down the formula, actual quantity minus standard quantity at actual for the actual output, and then times the standard price. So the first thing is you start at this point, you write down the formula first. So whatever you will have your cheat sheet with you, write down this formula first and then fill in the numbers. That's all it is. So actual quantity minus standard quantity for the actual output. So we know that the actual quantity is 57,000 pounds. So actual quantity is 57,000 pounds. We know that. Standard quantity for the actual output is 10,000 units. And the standard allowed is 6 pounds. So basically, actual quantity is 57,000, standard quantity is 60,000. So standard quantity allowed is 60,000 and you use 57,000. So this variance will be favorable or unfavorable? Hello, everyone. Actual quantity used is 57,000. You are,
Favorable.
it will be
Unfavorable.
favorable because you used less than what you were allowed, right?
Yeah.
So the difference is 3,000 and your standard rate is 90 cents that's given to you. So 3,000 times 90 cents will give you 2,700 favorable. Now, over here, many students will put 2,700 unfavorable also as an answer, and that will be incorrect. Be careful. You should understand the interpretation to answer these questions. If you don't understand the interpretation, you'll have a problem. Okay, everyone understands this, please?
Yeah.
Okay. Try this. This is on direct material price variance. Please try it. Type in your answers, please. Everyone, you should have got your answer by now. Please type in the answers. Okay, I'm not sure what you're waiting for, but you should have got 6,700 unfavorable. Again, same thing. The difference between actual price and the standard price, 90 is the Actual price, standard price is 80. Since you paid more than what you budgeted for, the variance will be unfavorable for the entire quantity purchased at 67,000.
I was overworking the problem. That's what took me so long.
Yeah, I did the same thing.
Okay, didn't you write down the formula first?
No, well, I got the 6,700, but then I started calculating labor and I just misread it. I was looking at more than just the direct materials.
Okay, but did you get this?
Yes, I did. I got the 6,700.
Oh, so if I would not have given you that choice, you already had a problem.
Yeah, I already had the 6,700, but then I started trying to calculate what was estimated for labor and manufacturing overhead.
Okay.
I was just overworking the problem.
Okay, that's what I was wondering because this was a straightforward problem. There's nothing to it. And you'll make the similar mistake during the exam if you don't read it carefully. That's why I said, as soon as you have the problem, write down the formula. So if you see this problem, direct material price variance, your formula is down, then just fill in the numbers. And if actual price is more than what you paid, in this case, you paid 10 cents more than the budgeted price. That's why the variance is unfavorable. Okay, try this one, please. In this case, it is total 1 minus 3. If you got it right, it is just addition of actual minus the standard. That's all it is. 1 minus 3. The number 2 is actual at standard. So your actual is 600, your standard was 627. So you saved 27,800 favorable. That's for the total. So this is the combination of direct labor rate variance and direct labor efficiency variance together. So your first is generally actual hours times actual rate. That's the actual. Your 2 is actual hour at standard. And then standard hours times standard rate. So this is 1 minus 3. This is actual, budget, flexible. And this is your standard or budgeted. Master, you can call it. Master, standard, whatever you want to call it. Okay. So this 1 minus 3 gives you the total variance. Direct labor rate variance, actual rate minus standard rate. So actual hour at standard rate is 264. That's what it is. So you should be able to do problems like this Since you have asked for more multiple choice, you will see more of these. Also, your exam is a 2-hour exam, so number of questions will increase accordingly. Or once the topics have been covered, that's about it. Okay, so I'll be covering nearly every topic on the final for chapters 20 to 23. Okay. Let's move on to let's see if I can get into the next topic. Okay, this is basically next chapter on performance evaluation. So this had two parts to it. One is different allocations, segment reporting or segment income statement, and evaluation of the segment using RI, ROI, and so here it is. A company has two departments that incur delivery expenses. Analysis indicates $16,000 expenses. That department Y had a direct expense of $1,700 for deliveries. Z had no direct expense. So as far as the direct expense is concerned, that has been written just as it is. The indirect expenses are 14,300. So we need to allocate this 14,300. 55% of the regular delivery request originated department Y. So 55% goes to, of the indirect goes to Y, and 45 goes to Z. So the total is, after the delivery expenses, after the allocation, is 9565 and 6435. Again, there is nothing new. It is just the way the allocation has been done. That's all. Means you have done the allocation number of times. Just read what the basis is, how they are allocating, and that's about it. Questions? In this case, they're using the 160,000 to, if based upon the value. So how much should be allocated to the flour based upon the value. So our total value is given to you. Feed 160,000 at 60 cents a pound. So 96,000 is its value. 48,000 times 250, 120,000 is the value. Starch is 20,000 times 120. So the allocation is 40, 50, and 10. So 50% of 160,000 will give you 80,000. Again, as I said, there's nothing much here, and it's just an allocation method. Any questions, clarifications here? Okay, try this one, please. Make sure you're able to get your answer.
Could we go over this one? I'm off by like 2,000. I don't know why.
So it says, what is the total amount of office expenses that should be allocated to grinding for the current period? So these are the three bases: number of employees. Sorry, so the bases are salaries, depreciation, and advertising. These are the expenses that needs to be allocated. So these are the 45,000, 27,000, 62,500. So the first basis is based upon the number of employees. So the total number of employees is 5,500. So allocated is 2,200 over 500, or sorry, we are just doing it for the grinding. So 3,300 over 5,500 gives you 27,000. And then for the depreciation, you got based upon the cost of goods sold, 162 by 260, which is the total cost. And then advertising is this. Did you get all these three numbers?
Yeah, I had the wrong denominator for my depreciation, but I understand it now.
Okay. Any other questions on this, please? Okay. Cash conversion cycle is basically the time it takes to convert cash into sales and then back into cash. So I don't know. So that's given to you in the cash conversion cycle. Number of days sales in account receivable plus days sales in inventory minus the days payable outstanding. So this is given to you as like one of those formulas over there in the cash conversion cycle. It basically, time it takes to convert the cash back into make the sales and convert it into cash. So if account receivables, days sales in account receivable, so 52 days your sales is outstanding, money is outstanding in the receivable, then in the inventory, and you're paying it in 62 days. So the total money is outstanding for about 59 days. It takes about 59 days here. You should be able to see a PowerPoint presentation.
Yep.
Now the cash conversion cycle, as I said, that's given to you. How to compute the number of days in the cash conversion cycle? That's basically using the formula that you know from previous chapters. Cash conversion cycle is number of days sales in accounts receivable plus number of days sales in inventory minus days sales in accounts payable. So days sales in accounts receivable is computed as accounts receivable over net sales times 365 and so on. So those are for some of the formulas that you have done in the previous chapters or in 201. So we have got these many days worth of sales in accounts receivable. These many days sales in inventory and payable. So on an average, it is telling you that these many days sales is outstanding in receivables in inventory and this much is in payables. This we have to pay obviously. So that's how much time it takes to get it converted into cash. It's also an indication of how effectively you're managing your working capital, that is current assets minus current liabilities. Shorter it is, better it is because then your turnover is higher. Okay, here is a problem on ROI. Can you compute the ROI, please? Did you get it for beverage? So you've got beginning and ending divided by 2 gives you the average. So you've got the operating income for beverage, operating income for cheese, and average invested assets. Means average is just addition of the two divided by two, these two, beginning and ending divided by two. 361 by the average, 646 by the average. That will give you 361 by 2645 and 646 by 4446. That's the ROI. Does everyone understand the ROI part?
Yes.
Okay. The next is compute the profit margin, which is operating income by sales. So that is straightforward. Operating income is 361 and 646, and sales is given to you. Okay. Any concerns, questions here? Last is the inventory turnover, sales over average invested assets. We know how to find the average invested assets. We have been given the sales. That gives you the turnover. So if you multiply the two, that is the investment turnover, and your profit margin, that should give you the ROI. Questions, clarifications here? We already did this very recently. I can just do one more of the. We already did this. We were on this problem. We did that. Yeah, we've done all of these now. Okay. Okay, in the last chapter, this is scrap and reworking. Should the company sell the units at scrap or rework them? Obviously, if we make money, more money by reworking it and selling it, then we do that. If not, then we don't. So in this case, they've got 10,000 defective units, which costed 530 to manufacture. Can be sold at 280 each or 490. So at 280 for 10,000 units, it will be 28,000. And they can be worked at a cost of 490 or 49,000 and then sold at 88 tens for 81,000. So 28,000 versus 32,000. So you should rework the unit to basically make the money. Is everyone okay with that, please?
Yep.
Try this one on your own, please, so that if there is anything. So you have to determine the company's profitable sales mix or the most profitable sales mix. They specialize in two products. TLX is 2 units per hour and MTV units is 5 units per hour. So we got the contribution margin 945 and 325. And it takes 2 hours, this takes 5 hours. So per unit contribution margin, contribution margin per production hour is 1890 versus 1620. Then both products are sold to a single customer. Maximum output of 4250 units for TLX and 2265 for MTV. So 4250, 2265. So we have got 2500 hours. So since we are getting higher contribution margin per hour from TLX, we produce as much as we can sell, remaining hours to MTV. So your combination will be, you've got 25 hours devoted to product TLX. You can make two units, so you can make 4250 units. 453 hours at 5 units gives you 1875 hours. And contribution margin per unit is given to you. You add that will give, this is the highest contribution margin you'll get given these constraints. Question. Any questions here, please?
Nope.
Okay, so that's the constraint on the sales mix. This is if you eliminate a department, then what happens? Generally, the cost that will give you concern is the indirect fixed cost. And you just eliminate that part and you'll get the decision. Okay. So try this on your own for Thursday. And once you do all these problems within a certain set of time or certain amount of time, you should have a good practice for your final exam. I provided you whatever I can. Now it's your turn to finish the issues, finish the problem. I got few messages regarding the extra credit points. And just to let you know that the extra credit points are, you got this extra credit tabular assignments, which were due on April 20th. I hope you have done it. These were due on 4/20. Have you all done this? These
I've
are
done
like,
some of them, but I haven't completed all of them yet. I was going to work on them more today.
I'll give you few days to work on it. Make sure to use this extra credit assignments, please. Okay. Anything else you need? Okay, so I'm assuming all the course has been done, the review has been done. It's up to you now to basically bring questions to me on 27th. If there are no questions, I will end the class early on 27th. And we will then decide for 29th if we need to meet or not. If you have got bunch of questions on 27th, then I'll meet on 29th. If there are no questions, then I'm done.
Thank you.
And I'll be here as long as you need me.
Thank you.
Take care, guys. Have a nice day. I'll see you on 27th now. And you have got my email also?
Yes.
Yes.
Okay. Take care. Bye.
Thank
Bye.
you.
Bye.